CME Group launched Micro E-mini Futures Contracts. Discover how a smaller Micro E-mini Futures Contract opens the world to greater trading possibilities.
Welcome to Market Movers. I'm Jim Uriel with Scott Martin.
Hi, Jim.
Okay, so we are a week away from a Fed meeting. The CME's FedWatch tool says that there's about a 20% chance, let's call it, of a Fed ease, which is unusual. Usually by a week away, we have a high odds or very, very low odds. Do you think if they don't ease, it's going to shock the markets badly?
Maybe not badly, but I think it's definitely going to shock the markets to some degree, Jim, because I would argue that whether it's the ES or the ZN, let's say, the markets have tried to lead the Fed into the soonest rate cut possible, which, like you mentioned, is next week, which they may not get.
It's really amazing. Like you said, it's the markets leading the Fed. The Fed rhetoric followed the markets, too. Let's say they shock the markets a little bit and cause a bit of a risk off and leave rates unchanged. Will that end up compressing long-end rates because people will flock into that?
Yeah, because people will say, or traders or investors will say, look, Fed, we're trying to tell you to cut rates, and therefore they're going to bid up bonds.
Amen. Before we dive into our trade discussion, I'd like to point out these are examples, not recommendations or advice. When we price these out, the SEP 10-year was trading 127 even, and the June ES was trading 28.82. Scott?
Yeah, and as those all are being priced out, Jim, I noticed I'm wearing cufflinks today, and I don't have my usual sleeves rolled up. So sorry about that. So I hope this still goes okay, my friend.
It should.
I think something to help make sure it goes okay is an interesting kind of positioning I'm looking at today in the ZN specifically, as we've talked about rates here. So as an example, Jim, I'm looking at buying the week 4 127 half call spread for about 12 ticks. This will cost you $187 to put on to make a potential $313. It expires, by the way, on June 28th, which is my birthday, and also the start, though, of the G20 summit. So that's a very interesting point in time with respect to how I believe markets are going to treat both the Fed meeting next week and this possible rhetoric that happens, obviously, leading up to the meeting where maybe a deal with China still is far away, which I believe it is, and therefore the ZN gets bid up after we had a nice low in ZN today, in fact.
I like to trade a little bit too. I think if they surprise the market and the stocks cascade lower, this trade will fill out quickly because I think it will push there. I don't think they're going to disappoint the market, and that's why my trade's a little bit different. And we're talking about the micros right now, and we're talking about a stop in, which sometimes this is counterintuitive to people too. But just like a stop loss, you place a stop that's above the market if you want to go long, and as the market starts to show some strength, it stops you in at that price. So this is a stop in the June S&P, the micro, at 28.90, which is 8 ticks above where the market currently is, with a target of 29.40 on the upside and a stop loss placed at 28.55. So it risks $175 to make 250. Thoughts, other than you think the direction's wrong?
Other than the direction being wrong, it's a good expression of how to manage risk, though, with the micros, I believe, right? I mean, you pick out some levels, you have some areas where you can stop, you can have some things that could go against you, but it doesn't hurt you terribly. So with respect to just how things are going to pan out, still, Jim, I'm still concerned about a lot of the market's reaction to things falling apart after they've been nicely quiet for the last week or so.
In a word, if they don't go, can they calm the market with dovish talk following it?
No, I think it's all action now. I think we've heard about the dovish talk long enough. It's time for the markets to see some real results, which is a rate cut, my friend.
Thanks for joining us on Market Movers. I'm Jim Uriel, where we are helping to make you a better trader.